Hi, I'm Max Keiser, and this is the Keiser Report. Drunken stupors, fat fingers, unwitting Americans. Stacy Herbert, tell us more.
Well, Max, first, it's just the end of the second quarter, so I'm going to give you the data. This is a tweet from the Wall Street Journal. Data for the second quarter of 2010, which ended today. NASDAQ down 12%, S&P 500 down 11.9%, Dow down 10%. Notice, however, Max, that they failed to mention this chart. This is the second quarter chart for gold, up well over 10%.
Yeah, because most of the insiders and big money around the world watch this show. You don't need to be an alleged spy to know that gold's going higher.
Well, Americans, of course, wouldn't know because they're not told. So here we have study. Once America started waterboarding, newspapers stopped calling it torture. So this is a Harvard study, and they looked at papers back to the 1930s in America. And anytime the papers referred to waterboarding, they called it torture. That is, up until 2004. From 2002 through 2008, the studied newspapers almost never referred to waterboarding as torture. So as an example, the New York Times characterized it as torture 81.5% of the time prior to 2004, and only 1.4% of the time after 2004.
Propaganda.
It is propaganda, but it's also the citizens of America have no idea that they're torturing. So they're told instead that all these people hate us for our freedom.
That's right. The reason all those people hate them is because they're torturing them.
Exactly, but they won't know because the media, which is supposed to be doing the job of providing information to Americans what their governments and politicians are doing.
Well, I remember the New York Times held back on that wiretapping story before the last Bush election, and that was really the end of the New York Times as far as I'm concerned. They are totally in bed with the Pentagon and the monopolists.
Well, here's some more unwitting Americans. Fed made taxpayers unwitting junk bond buyers. So Federal Reserve Chairman Ben S. Bernanke and then New York Fed President Timothy Geithner told senators on April 3rd, 2008 that the tens of billions of dollars in assets the government agreed to purchase in the rescue of Bear Stearns were investment grade. They didn't share everything the Fed knew about the money.
Right. You know, Stacy, you and I have been talking about this stuff for several years now. And at the time, we made it clear to anyone who wanted to get the facts that what they were getting over there in the Fed was Obama dollars. This is an Obama dollar here. This is an Obama dollar. You know, it's Obama's. You can be combined by the truckload here for 50 cents for a bushel. It's junk. It's garbage. The Fed has junk, garbage, garbage. It's all garbage. Obama dollars are worthless.
Well, according to the article, Bloomberg says the so-called assets included collateralized debt obligations and mortgage-backed bonds and $16 billion of credit default swaps, and taxpayers wound up guaranteeing high-yield, high-risk junk bonds. And remember, we're talking about the media's involvement in this. Remember, James Cramer from CNBC Financial News had the most famous moment of the financial crisis when he was shouting at Ben Bernanke, basically because of Bear Stearns. Remember, he was like, I'm speaking to people at Bear Stearns. You've got to come rescue them.
All right. So here you have a situation where in America now, waterboarding is not torture, but a collateralized debt obligation somehow is worth more than an Obama piece of toilet paper.
And here's a quote on this story. Senator Sherrod Brown, an Ohio Democrat and member of the Senate Banking Committee, said this regarding Timothy Geithner and Ben Bernanke buying these junk bonds on behalf of the taxpayer. Either the Fed did not understand the distressed state of some of the assets that it was purchasing from banks, and it is only now discovering their true value, or it understood that it was buying weak assets and attempted to obscure the fact.
Stacy, the reason why this global economy is still deflating, and while none of the so-called stimulus packages are working, is because the Fed willingly took hundreds of billions, if not trillions, of toxic garbage off the commercial banks' balance sheets and called it, 100 cents on the dollar. It's not even worth 1 penny on the dollar. And they still have yet to reveal hundreds of billions, probably trillions more, of worthless paper, which means that no matter what the Federal Reserve or the global banking system throws at this economy, it's never going to re-stimulate because they've got way more toxic debts on their balance sheet. So it's a total fraud. It continues apace.
But also, when America is doing this, when they're bailing out the banks, it's free market capitalism. And it's still, the Americans still consider their system free market capitalism. So when they see G20 protesters or IMF protesters, they think these people are anti-capitalist. They call them anti-capitalist.
Right.
When they themselves are the anti-capitalist.
Again, a total misuse of language. These people are not anti-capitalist. They're anti-feudalism. As America slips down into becoming a neo-feudal state of monarchs and oligarchs who have confiscated the nation's wealth, the wealth of the nation is now zero. To paraphrase Adam Smith, and these people are protesting their return to indentured servitude and debt peonage.
And then here's some more unwittingness, okay? So America spends $1.1 billion in the last 2 years on fighting the war on drugs in Mexico alone, and 22,000 Mexicans have been slaughtered in this war on drugs. Headline reads, banks financing Mexico gangs admitted in Wells Fargo deal. So Wells Fargo, which bought Wachovia in 2008, has admitted in court that its unit failed to monitor and report suspected money laundering by narcotics traffickers. The bank declined to answer specific questions, including how much it made by handling $378.4 billion in illicit drug money.
Let's go back to 2008. I want you to Google this. If you recall, during the height of the financial crisis of 2008, what eventually the banks had to do to roll over their short-term paper was draw on the drug cartel money. They actually had to contact the major kingpin drug cartel leaders for a cash call.
This was information from either the UN or the IMF that the only liquidity at a certain point being provided was from drug money. But also in America, the American population themselves, they're very engaged in the war on drugs, and they're happy for the government and the DEA to seize the assets of people who get caught with like a few flakes of marijuana. But here's what happened to Wells Fargo. Wells Fargo promised in the Miami federal courtroom to revamp its detection systems. If Wells Fargo keeps its pledge, the U.S. government will, according to the agreement, drop all charges against the bank in March 2011.
Wow, what a penalty. Look, the war on drugs is bogus because if they really wanted to stop the drug trade, they would stop the money laundering trade, and it's easy enough to do that because it's all clearly documented through the various avenues that money flows internationally.
Well, according to the article, no big U.S. bank, Wells Fargo included, has ever been indicted for violating the Bank Secrecy Act or any other federal law. Instead, the Justice Department settles criminal charges by using deferred prosecution agreements, in which a bank pays a fine and promises not to break the law again. They promptly do break the law again in a different capacity.
Right, deferred prosecution means never prosecute. Deferred until never.
Jake Blum, a U.S. Senate investigator for 14 years, says large banks are protected from indictments by a variant of the too big to fail theory. There's no capacity to regulate or punish them because they're too big to be threatened with failure, he says. They seem to be willing to do anything that improves their bottom line until they're caught.
Right. How's that different than having kings and monarchs totally rule a society in debt peonage? Please, let's move on.
So this takes me on to the final story along these rogue bankers with fat fingers. Some of them are actually in a drunken stupor. How a broker spent $520 million in a drunken stupor and moved the global oil price. So PVM oil futures trader Steve Perkins bought 7 million barrels of crude in late-night trading binge on his laptop, costing $520 million. Well, he was found guilty of improper trading by the FSA, the Financial Services Authority in the UK, fined £73,000. They didn't want to charge him more because they didn't want to cause him financial hardship, they said. And they banned him for 5 years from trading in the UK.
It brings to the fore this model that when these speculators make a mistake, the society has to bail them out. The losses are socialized. When they make a gain on their lucky bets, they get to keep the profits. So it's casino capitalism, or what I call gulag casino capitalism, where if you're not let's say, a partner at Goldman Sachs, you're considered to be in a gulag, and you're given all the access to cheap lottery tickets you can afford, but you'll never make a living, and you're going to end up dying in debt peonage. Thanks to Goldman Sachs, J.P. Morgan, Treasury Secretary Timothy Geithner, Ben Bernanke, and, of course, Barack Obama, Casino Gulag Chief.
Well, Max, there's an important follow-up to this story because, you know, we're trying to reform the financial system. Allegedly, our politicians are trying to do this to keep bankers from destroying the global economy again. Well, within 24 hours of the FSA finding this guy, basically banning him from trading in the UK for 5 years, Steve Perkins, the broker who traded $520 million when drunk, to resume career in Switzerland. The Telegraph says it will be embarrassing to the FSA.
Well, any wonder that gold is heading toward $5,000 an ounce? And you don't have to be a spy to know that. Let me give you the same information, but as an alleged spy, and see if you believe me anymore. Okay. Gold is going to $5,000 an ounce. There. Do you believe me more now that I'm an alleged spy? Gold is going to $5,000 an ounce. Gold is going to $5,000 an ounce. It's going there regardless of whether you get the information from an alleged spy or not. It's still going to $5,000 an ounce.
As a final statement on this Steve Perkins, the FSA says that Mr. Perkins poses an extreme risk to the market when drunk.
Why? He's making them millions of dollars. They're going to keep feeding him more booze. Look, when I was working on Wall Street, we had a guy in our boardroom who was drunk, falling out of his chair. The manager just came by, gave him another pint of vodka and said, "Keep dialing, son. You're making us money."
Yes, but Max, they're saying he's an extreme risk to the market. The market is separate. That's where Ponzi's lose their money. The bank itself takes the money from the market and puts it in their own pocket.
Right, and that's why firms like Goldman Sachs and J.P. Morgan are perfecting their so-called high-frequency trading and algorithmic trading because they themselves are now getting into the market-making mechanism itself to manipulate that, to protect themselves against anyone making money but them.
But it also brings up one other thing about this. Now, credit default swaps were created by J.P. Morgan post-Exxon Valdez because of a drunken captain of the ship running the ship into the ground. Now, the same thing, if you start hiring famous drunk brokers, you have plausible deniability. When the whole thing crashes, the guy was drunk, you know, he has a problem, and therefore we're immune to prosecution.
So the road to riches on the City of London and Wall Street is make sure 24 hours a day you're drunk.
Apparently. It's plausible deniability.
Well, anyone can do that.
We can all be unwitting.
Wow, fantastic. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more, so stay right there. Welcome back to the Keiser Report. Time to welcome to the show Luc Saucier. Luc is a lawyer in Paris with his own firm, Saucier Avocat. Luc has worked with many of the biggest banks in the world, and he is a Fulbright scholar. Luc, welcome to the show.
Hello, Max.
All right, Luc, first I'd like to ask you about the trial of Jérôme Kerviel, the so-called rogue trader that lost billions for Société Générale. Kerviel says, I quote, "I pushed the system to its limit, but what was happening around me was a giant fraud perpetrated by all the trading floors in the world." So he's talking about the entire global system here. To get good results, any tricks were permitted. The golden rule of the banking culture was simple. If you win, you are right. If you lose, you're wrong and you're out. Is that true? As from what you've seen in the banking industry, the only law of the banking industry is to make money. Other than that, there is no law.
Basically, the idea is that the only unwritten law is not to get caught. If you break some rules, then you find yourself alone and you're eliminated. But in the meantime, while in the process of making money, more profit, it seems that law does not exist, and that if you were to be a lawyer and say, well, you cannot do that, you would be considered as a bad lawyer, that you're just here to solve problems, not to create problems. And a lawyer that would kind of be a problem for a bank in the process of making money would be considered being a bad lawyer.
Okay, so now you're introducing another element to this. You've got bankers, rogue traders, who apparently are operating completely outside of the law. You've got plausible deniability from their managers, who apparently anytime anyone gets caught, they simply say, oh, we just disavow all knowledge of what he was doing. But you're also saying that on the legal side of the business, which just the compliance side of the business, there's also a bit of an arm's length between what is known to be the legal statute governing this industry and what the internal legal teams who are supposed to be governing these banks accept as their role. Let's put it that way. Is that true?
I think that generally banks are complying with the law. The law contains loopholes, technical laws contain loopholes, and actually things that are quite dangerous for the economy in general are being done in full compliance with the law. That's one point. What I've also seen is sometimes there are pressure on lawyers to find solution, and the pressure is so high that sometimes it's spent to basically circumventing the spirit of the law. And so I'm going to move to the new law that's just been passed in the U.S. It's a 2,000-page bill. And why is there 2,000 pages? Because it's full of exemptions. So already when the law is being put in place, even if it's a very good law, there are probably one loophole by page, so that's 2,000 loopholes. And then the law is going to enter into force in 7 years. There will be other presidents, there will be campaign, candidates will need money. And I think that even if you start with a very good law, sometimes it's very difficult for technical laws to reach its goal.
But let's move on to something which is, I think, very important. It's work that you're involved with that I think needs to be talked about and get this word out to the general public. You're introducing, or you're working on a legal concept that will reframe these banking abuses in a way that hopefully will try to stem the tide of abuse. And the way we get into this is, as we know, the legal restrictions on banks don't seem to stop them from breaking the law and from holding the economy hostage. And we also know that just a mere moral transgression doesn't seem to work, because the mainstream media in America, they don't go after these bankers for breaking the law and abusing the economy and destroying people's lives simply because it's immoral. They don't recognize morality because it doesn't trade on the New York Stock Exchange, you could say. So there's a concept you've been working on, which is to frame this debate in terms of obscenity. Mm-hmm. Can you talk a little bit about this?
Basically, when I looked at the most well-paid individual in the finance sectors, you realize that in 2009, the biggest paycheck for a hedge fund manager was around $4 billion, and that the average paycheck of the 25 most well-paid manager was around $1 billion. And when you know that we are living in this huge economical crisis, that it was originated with the subprime crisis, and that hedge fund manager really made a lot of money by playing with the subprime crisis, you kind of find that this remuneration is rather obscene. And then you may think about, well, what can we do? Because apparently everyone is complying with the law. No one is aware that something is quite not moral, but there's nothing here to prevent people from making more money at any cost. So I looked at what happened for artists, and in the United States you have two really strong constitutional rules. One is the right to own, to make more money, and the other one is freedom of speech. But the Supreme Court accepted that when art becomes obscene, then maybe it's no longer art, and then there is no freedom of speech. And you can see along the cases that the Supreme Court really fought very hard to define what is art and what is obscenity. And what I'm saying is that when you see someone making more in a year without selling anything, except making money with money, is earning more than $4 billion, then I do think that here it's easy to see that part of the remuneration is obscene.
In other words, your observation of the legal system in the U.S., there's two extraordinarily firm, strong parts that nobody equivocates, everyone defends: private property and freedom of speech. And the only place we've seen a major exception on the freedom of speech is on the obscenity side of the equation. So you're looking at where in the legal system in the U.S. is there a fortress mentality that if you could bring on to your side and somehow position that would be to your advantage. The second thing I want to point out is that when you're talking about hedge funds, you're talking about multi-billion-dollar bonuses. People say, well, in the meritocracy, so-called, in a capitalist society, so-called, if you make a lot of money, you should be entitled to that money. But it's important to keep in mind that these hedge funds who pay themselves billions, because they were trading on inside information and market manipulation, were breaking the law. That's the first thing to consider. But because people don't consider the fact that they were breaking the law, they just look at the fact that they've aggregated a lot of wealth, and somehow wealth equals righteousness, wealth equals right. They don't consider the fact that they're actually breaking the law. I mean, that's the key concept here. The hedge fund managers, as we now know, the multi-million-dollar bonuses, were lawbreakers.
Yeah, that's a good point. But are they breaking the law? Because usually I found that they rarely lost a case on the ground that they break the law. So for some reason, they were properly advised, they were complying with the law, what I call technical laws. And what I think what we need in this world, in a global economy, is a new way to regulate. And we need, in addition to those technical laws that will be always complied by hedge fund manager, we need a law that said, well, beyond a certain level of remuneration, there is something unethical about it, there is something obscene, and then we will start redistribute wealth. But I'm not saying necessarily, and I'm sure that some hedge funds are breaking the law, some bankers and some traders are sometimes breaking the law. There are insider trading information, but those are two different things. What I'm saying is that even if you, with the current state of our legislation, even if we're all complying with the law, there are still some injustices that are being caused.
Sure. What I like about your idea is that if you can get people to think about these bankers on Wall Street as committing acts of obscenity, then maybe the public will look past the fact that they're lawbreakers and that they're morally bankrupting society. And then in their minds, they say, yeah, it's obscene. It's obscene like kiddie porn is obscene. So they start to think about Goldman Sachs and J.P. Morgan as kiddie porn, which on the financial front, that's what they're guilty of. They're guilty of the extreme obscenity that is the most aberrant in society. And do you think there'll be, this is kind of the idea though, isn't it?
Yeah, it's a strong deterrent. And what I like about this obscenity rule is that you don't necessarily need to put people in jail to prevent them from doing something. At some point, there will be some kind of moral pressure that can make you think twice before doing something. And what I found in my practice is technical laws do serve a purpose, but on top of that, we need something that is more general, like a general concept that will serve as a moral deterrent. Because what I found is that technical law are circumvented, and there are lots of lawyers, very good lawyers, working very hard for the banking industry, and they really reach the goal, and they are faster than the legislator. So this general concept would be difficult to play with because it will be on top of everything. Say it's okay for you to make a lot of money, but you cannot reach the level where it becomes obscene.
Right, because a huge part of the deterrent is, for example, in the arts, if you're branded as obscene, your access to prime time major network is cut.
Right.
So in this financial obscenity, if you're a bank on Wall Street and you're tagged with a label of obscenity, then your access to major bulge bracket firm activity of underwriting huge pieces of business is cut off.
Yeah.
So in this way, it could be a huge deterrent because then the obscenity risk is something that these banks would have to put on their balance sheet and would have to be discounted in their share price. So right now, Goldman Sachs stock was at 200. It's down to a 130 range because of the obscenity risk. It's not stated obscenity risk, not yet, but I think people need to understand what they're committing here is the equivalent of financial obscenity, and the stock market is puking up those shares and saying we don't want to own them anymore, and the risk could be zero in the case of Goldman Sachs because the society is intolerant of obscenity in America. It's a huge hot button issue, as is the private ownership rights. So this is I think it has a chance. So where are we in France on this?
There were some draft bill that were studied by some member of the parliament from the Party Socialist, and they really tried to find, well, how can we regulate that? And the first idea was to, mention obscenity and use it as a concept of law, and they found that it was actually not technical enough, and they went on going for a law saying, well, if the company is making profits and it's in good financial health, then they cannot fire employee if at the same time they distribute dividends. But you can see that here we are back into some technical laws where you say, okay, I didn't make profit this year, but I will make next year, or I made a loss, so I can distribute profit, or I made a loss, and then I can fire employee. And it's very technical, and you can be sure that lawyers will find loopholes, between. And so the idea is that on top of those laws, I still think that a general concept of law that will be a kind of tool for the judge, and to handle really, really extreme cases could serve some purposes.
I find it, of course, interesting that the socialists would push back a little bit against this and say we need something more technical. It's always the left that is pulling defeat from the jaws of victory, isn't it? You handed this to them on a silver platter, and of course they turn up their nose and they say, no, it's just not. It is not verbose enough. It's not flowery enough. We need to hire a steering committee to examine this a little bit more. Even though if this was presented to the right, they would rightfully run like mad in the opposite direction, because they know that if you can capture the perception, you win the game. Luc Saucier, thanks so much for being on the Keiser Report.
Well, thank you very much.
And that's going to do it for this edition of the Keiser Report. If you want to send me an email, please do so at keiserreport@rttv.ru. I want to thank my guests, Stacy Herbert and Luc Saucier. Until next time, this is Max Keiser saying bye, y'all.